Let's bring on board Mr. Ranjan Dhawan, Executive Director with Bank of Baroda, that is BOB, who joins us live. Mr. Dhawan, good morning. Thank you for joining us. My understanding is that Bank of Baroda could consider a rate cut very soon after the government communication. Is that right?
I do see a rate cut in the offing. Whether it comes right now or it comes later, I do not know. Despite all the volatility in the market which we have recently witnessed, I remain convinced that over the next 8-9 months, till the end of the next financial year, bond yields are going to go down to about 7%. That is my call. And in such a scenario, I do feel that rate cuts will occur over a period of time. Whether they occur in 1 week or 1 month, I don't know. I couldn't say. The market is very volatile. We'll have to take a call on it.
Mr. Dhawan, if you could, slightly quantify what could be the quantum of the rate cut. Could it be 25 bips that you're talking about?
No, at this point of time, I would not like to quantify it for the very simple reason that, the bond yields itself in the market have been fluctuating very rapidly. And let them settle down for a little bit. They went up very sharply. They are down to about 10-year bond yields are down to about 7.42. Let them settle down. Let the volatility settle down. The rupee also has weakened significantly. I think we will have to let the market factors play themselves out. Let the market settle down a little bit and we'll take a call on this.
Mr. Dhawan, I want a clear stand from you. State Bank of India has taken a clear stand. They have decided not to cut rates. Bank of India also has taken a stand that they will cut rates. What is BOB's stance when it comes to a rate cut?
BOB currently is making up its mind. Probably we'll do so in a couple of days. We have as yet not made up our mind. Let us see going forward. But I think you can take a cue from the big daddy, State Bank of India. A signal from them is always significant.
So you are saying that in the short term, if macros don't improve, you will not consider a rate cut despite the finance minister communication?
No, look, a rate cut is, the price of money is the sum total of the entire economic environment. There has been depreciation of the currency over the last several years because of high inflation. So, and the government also is concerned that, look, the current account deficit is far too high. Now, weakening of the rupee means that inflation, it will have some impact on inflation, perhaps not a major one. It will have some impact on inflation. Now, all this we will have to, but in the long run, the imports will become more expensive, and India should have a better export, competitiveness because of the weakening of the rupee. Let us see how it plays out. The market is still extremely volatile. The rupee is still jumping. The stock market itself is extremely volatile. The bond yields are extremely volatile. In such an environment, for me to commit today, our ALCO hasn't met. Probably in a couple of days when our ALCO meets, we'll take a call on this. I would not like to commit myself at this point of time.
Fair point. The RBI has also passed a circular that banks make provisions on the unhedged currency exposure of a corporate borrower given the exchange rates. What is the likely exposure that your bank will have from such borrowers?
As of today, the exposure from such borrowers is minimal. Normally, whatever the derivative contracts are, we have a back-to-back covering for our bank. Therefore, as far as our bank is concerned, we are not concerned at all. The exposure is not at all significant. As far as our borrowers are concerned, we are keeping them on a very close watch. If they are adversely affected, then we normally are tending to make margin calls. Or if they have a cash credit account, we tend to earmark a certain portion of the cash credit account so that they are able to make their commitments on the due date. Most of the borrowers which have unhedged foreign currency exposures, they have a natural hedge in the form of exports. A large proportion of their sales are in the form of exports. So they have a natural hedge in that sense. We do not anticipate a major problem in this regard.
How much income do you incur from forex trading for FY14?
FY13, I don't have the figure right at the tip of my tongue. Fair, several hundred crores. Forex trading results in exposure income of several hundred crores. We are a large international bank, and one-third of our balance sheet is global. So therefore, it is significant. That is significant. So but I don't see it being impacted adversely.
So you're saying that the rupee depreciation has not impacted that at all?
No, not really. In fact, the rupee depreciation also, we feel, for the current quarter ended 30th of June, our forex income, our treasury income, etc., should show a significant improvement over the corresponding quarter of last year.
Mr. Dhawan, Finance Ministry is making a case that even though Reserve Bank of India has cut rates by about 75 bips in this calendar year, very little transmission is happening, and the reason why transmission is not happening is because banks are not ready to take a hit and they do not want their NIMs to go down. Is that correct?
Look, what has happened is that the banks are also, the rate cuts go both ways. We are also deposit-taking institutions. With such high inflation rates, our customers are moving into alternative assets such as gold. Now, to retain such customers and to have good deposit accretion in the system, we have to offer good deposit rates. Now, if we offer good deposit rates to our customers, correspondingly the lending rates we are not able to put down the lending rates also. So, the macroeconomic environment plays a very significant part in deciding what the deposit rates are and the lending rates are. Also you must understand that the policy rates are short-term rates, they are overnight rates. Until and unless the long-term rates also show a softening, the impact and the transmission would be muted. Which is not to say that the transmission will not happen, the transmission will happen. But it will take time. My sense is that it will happen slowly and gradually over the course of the year.
Mr. Dhawan, asset quality of late has been a huge concern for PSU banks. How do you see your asset quality in the coming quarter and the balance of the year as well?
We were pleasantly surprised as on 31st of March when our gross NPA ratio to our total assets came down from 2.41 to 2.40, which means essentially that the asset quality, the concerns of asset quality have bottomed out. And we had a feeling that there would be no further unpleasant, surprises for us. Going forward, I also feel that both for the industry as a whole and for our bank, we should not see any further unpleasant surprises. Maybe one or two large borrowers have a large impact on asset quality. I do not know. I can't say at the moment. But we feel that the bad assets have bottomed out in the system. And for a bank also.
So, do you think going forward, life of PSU banks will get slightly tight and slightly tough? Because new bank licenses means competition will intensify, new restructuring norms mean restructuring will go down, and then soon banks will also have to comply with Basel III norms, which means they will have to raise additional capital.
Look, as far as new banks are concerned, new banks, the licenses are not going to come up in any hurry. They are going, I imagine it will be next year before the licenses are given. One. Number two, setting up a branch network is a long and painstaking process. It has taken, even for example, the banks which got licenses in the 90s, it has taken them all of a couple of decades to get to the point where they are. And some of them fell by the wayside also. Now, I do not feel that for the next few years, new licenses are going to be any problem for the existing banks, whether in the public sector or the private sector. I don't think they will offer significant competition. So, that is, what was your next question?
No, one is new bank license, second is the new restructuring norms, and third is Basel III capital requirements.
Okay. As far as the new restructuring norms are concerned, those are applicable for the fresh assets. Yes, they would have an additional impact on profitability. But going forward, if we feel that, the NPAs in the systems have bottomed out, then the new restructuring norms should not have that disproportionate effect on the balance sheets. As far as Basel III norms are concerned, yes, going forward, new capital will be required, both through organic growth and also because of the new norms. This amount over the next several years is going to be a large one. But don't forget, the profitability of the system is robust, and a lot of the new capital will come from retained earnings. We can hit the capital markets. A lot of banks, I think, would plan to hit the capital markets. As far as the PSU banks are concerned, the government is also committed to recapitalizing them and giving them capital over the next few years. So I do not think, and I think you will all agree with me, that Indian banks are, as far as the global competition is concerned, Indian banks are exceptionally well capitalized. Many banks are, Basel III compliant as of today. Certainly, our bank is Basel III compliant as of today. Going forward, I do not see this to be a concern.
But Mr. Dhawan, really appreciate your time, and thank you for patiently answering all our questions and all our queries.